At WhatsApp.
I love
When I
WhatsApp.
do you,
I do.
I went
Yeah.
looking for the because I saw I'm sure that Charles responded to me with that title agent question, and I went back and sure enough you had, and then I saw that I had like 6 messages on my WhatsApp. One from late June from someone that wanted to do an application. I'm like, oh no.
Yeah.
I love WhatsApp.
Yeah,
And
thanks.
anytime there's an opportunity for a group chat, I'm like, please, let's do WhatsApp. It has
I
to
mean,
be
it's good
WhatsApp.
for group chats, but I just don't check it.
Yeah, but just turn on your notifications.
I do, but in my mind, WhatsApp is like ignore in my mind.
I
don't
gotcha.
know.
I got 3. You know, it's my personal email, my business email.
Yeah.
I get texts. One more place is just a challenge.
Yeah, no, I
Yeah.
get it. I get it.
Anyway, so that's the camera. Mike,
Yes.
got it.
Yes. And I think we're good.
Yeah, we don't really follow any kind of
Script.
format. Yeah, we just,
Okay, all right.
it's casual.
So was there a specific topic you wanted to address? Questions? Well, let's explore what questions you have in your mind, because chances are good that those questions are going to be in everybody else's mind.
That's
So-
true. Yeah.
So what in the lending world, mortgage world, what questions you say? Well, I wonder why that's that way.
Mhm.
Have you any?
Yeah. Yeah. Should we get started or?
Yeah, let's do
Sure.
it.
Yeah.
Okay. Are you recording?
Yeah.
Okay. Cool. Well, let's introduce. Yeah.
All right, welcome. This is another episode of Do Your Homework, where we help people make informed, smart decisions, especially if you're doing work on your home. So we have a great guest with us today, Armando. Thank you for being here.
Yes.
It's
Thank
wonderful
you.
to be here.
Appreciate
Thanks,
you.
Thanks for having me, gang. I really appreciate the opportunity to hang out with you.
Yeah. Awesome.
Yeah, met Armando a few months ago. I mean,
Yeah, a
maybe
few
over
months
a year now.
Yeah, get close to it.
Probably.
Yeah.
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 Doing lending here in Orlando.
It is my passion. I love it.
You've been doing it a long time, though, right?
30 years.
Wow. And strictly residential, or do you do both residential and commercial?
So we have the option to do commercial, but I focus on residential. So residential is really my sweet spot. If folks need guidance with commercial, I can give them guidance. But again, sweet spot is residential. And residential is 1 to 4 units. So
Oh, yeah.
anything,
Okay.
So 1 to 4
I remember
family
that.
Yeah.
properties are residential. 5 units and up in terms of apartment buildings are now commercial.
Okay.
Different guidelines, different rules.
Amazing.
Yeah.
Okay, so I would think that the most challenging part of diving into this world, right, is being a first-time homeowner, right? Because that's when you really
Yeah.
are feeling like you're not really sure what to do.
Yeah.
So what would you say is step one? I'm a first-time home buyer, never purchased a home. Here we go. What do I do? Step one.
Step one is reach out to a lender, whether it's me or your local bank, if you have a relationship with someone. Really, that's step one. One of the common mistakes I see is that folks will go out, meet with a real estate agent, fall in love with a home, and now they're in a hurry to get the offer in.
Mm-hmm.
And the market's shifting a little bit, but it's still a seller's market. It's still, you need to be making an offer that's strong, and that strong offer includes a pre-approval letter from a lender, unless you're paying cash.
Okay.
So the start is reach out, have a communication with your lender, and get the ball rolling.
Mm-hmm.
And by get the ball rolling, all lenders are going to analyze 4 things for the borrower. There are 5 things total, but that 5th thing is the property itself, the collateral.
Okay.
Lenders are going to analyze income.
Okay.
So in terms of income, if I'm a salaried employee, they're going to want W-2 forms, pay stubs, tax returns. If I am on variable income, they'll definitely want to see the most recent 2 years of tax returns to sort of average out income over the last 2 years. If I'm self-employed, like most of us here are,
Yeah.
then they're going to want to see the most recent 2 years of tax returns. They want to see a history of being self-employed for at least 2 years. There are variations, there are options, but any variation from what is sort of the standard is going to be a higher risk for the lender, a higher cost for the borrower. So yes, there are bank statement loans, there are profit and loss loans, there are a number of options outside of that little box that Fannie and Freddie like or FHA like. But anytime there's a variation of that, it means more risk, which means more cost to the borrower.
Okay.
So income. Second item is debt. So lender's going to pull credit. And when credit is pulled, they're going to analyze what obligations show up on the credit report. Things like credit cards, car payments, student loans. If there is alimony or child support that is payable, then that counts as an obligation as well. So the lenders will then look at what your debt is, compare that to the income, whomever is borrowing, and come up with what's called a debt to income ratio. You'll hear that DTI, debt to income ratio. So that's really a measure of how much borrowing capacity do I have based on my current obligations, my current income, how much more can I borrow for this proposed house.
Okay.
Number 3 is the credit itself. So the credit is analyzed and the scores are analyzed. The higher the score, the lower the risk, the better the price. So for conventional financing, a minimum score of 620 is required, meaning if I don't have a 620 score, I can only well, we can do FHA, we can do other types of loans, but for a conventional loan, meaning Fannie Freddie, then those require 620 score minimum.
Okay.
The better the score, the better the pricing, the bigger the options.
Of course.
That's number 3. Number 4 is assets. What liquid assets do I have for this investment, for this purchase? So there are great down payment assistance programs. As of July 1st, we had the Florida Florida Hometown Heroes program.
Yes.
That
I've heard of this.
came into play. Funds are limited, so it's important for folks to get going on that if they'd like to take advantage. There are also other down payment assistance programs, wonderful options, but it's important to identify what assets, and if that means down payment assistance, that it's important to identify that early, again, by starting the process with your lender.
Who's included in Hometown Heroes again? It's like
almost anyone, really.
Right?
Yeah, I heard they changed it.
Almost anyone. So it's really in terms of who can qualify. It's pretty broad. The limiting factors are going to be you have to have the borrowers required to have a 660 score minimum.
Okay.
So remember we said 620 for conventional
now we're up
financing.
to 660.
Well,
For this program.
Yeah.
for this program.
Right.
The debt to income ratio, remember we discussed what your obligations are in comparison to your income. The debt to income ratio is 45 max, and there are some income limits, meaning if I'm making $1 million a year,
Probably not going to
probably
qualify. Yeah.
that
makes sense. Yeah, that makes sense.
But the reason I bring it up is because it's important. It's not free money. It's money it's really we call it a silent second. That money is used to purchase the home whenever I refinance, sell the home, or move out of the home. That money comes due, so the state wants that money back.
Oh, I thought it was a grant program.
It is
kind of.
It's
more like a loan.
Down payment assistance.
Okay.
So
And there's no interest on it, right?
no interest. So it's
So
silent.
it's an interest-free loan.
Yes.
in some ways.
Yes.
Yeah.
So it's an interest-free loan, but it comes with some requirements. So
Right.
with caveats, and one of them is you've got to have a score of 660.
Mm-hmm.
So for someone that has a 649 or 650,
It's not even looked at?
No.
Oh. Are there any restrictions on how long you have to stay in the home?
That's a great question. I do not believe so. But the moment that you leave the home, you have
to pay it back.
That money's back.
Okay.
Yeah.
Well, I mean, it's still a great program for
It's a
somebody
wonderful
looking
program.
for that down payment assistance.
It's a
yeah.
wonderful program, but it's important. I like to sort of qualify by saying it's not free money. There's no such thing as free
Nothing,
money,
yeah.
and it comes
Never.
with requirements. And
Yeah.
in order to determine, hey, is this a great option for me? You really need to start the program. Let's look at your income. And generally, the program also analyzes the household income, not just the borrower. So if
Got it.
I'm going to be the only borrower, my wife works and my son works, and we all live in the same house, they're going to look at the income for the entire home, even though make sure that I'm not making above the
Right.
limit for the household, even though I'm the only one borrowing the money.
Yeah.
So there are restrictions.
If your son is a TikTok star and he makes $1 million a year, then you're out.
If I have a brain surgeon for a wife, and,
Yeah.
not gonna work. So.
I gotcha.
Yeah, so Amy and I are relatively new homeowners, and I remember just feeling like this is my one shot. Like I have to take advantage of all the first time home buyer things. But we've talked about it before. There's still some options even after your first house.
Yep.
You can still do like house hacking in multiple units.
Yep.
Which was news to me when you were telling me the other day when we had coffee. And I know you're a big fan of that as well.
Yeah. So my recommendation for first-time home buyers is absolutely let's research what financing options are going to best fit the needs. If there's down payment assistance available, absolutely take advantage of it. But going into any situation with your eyes open, because there's no such thing as free. Creativity still pays a huge dividend in terms of life. So let's sit down and brainstorm about what works. So one of the things I recommend is for first-time buyers, consider buying at least a duplex.
Yeah.
The duplex gives you an enormous leverage and beginning in that, I want to own real estate. That tenant on that duplex is helping you pay for the mortgage.
Right.
Generally speaking, I can qualify for more of a loan if I'm borrowing on a duplex than if I'm borrowing on a single family, because now that rental income that is proposed is going to help me qualify for more of a loan.
Sure.
In addition to that, I only need to live in this duplex for 1 year. After that, I can convert it to just 2 rental properties, buy my dream home, and I can still use 3.5% down payment with FHA or 5% with conventional. If the opposite is true, if I'm saying, hey, look, what I really like to buy is my dream home with a white picket fence where I can keep my puppy and then buy an investment property, now I'm going to go and do 3.5 or 5% down on my first home, and that investment property that I now want to buy is going to require a minimum of 20 to 25% down payment.
Right.
So
Huge difference.
So buy the rental first.
So buy
Yeah.
a property that will be converted into a rental first. You buy it as a primary, you move into it, and then you say, you know what, this is my starter home, and then I'm now going to move into a single family, or just keep doing it.
Sure.
Yeah.
So in this scenario where you're purchasing a duplex, you'll live on one side of the duplex. Do you already need to have that tenant by closing?
Great question. The answer is no.
Okay.
If there's a tenant in there, so leases generally run with the property. Meaning if there's already a tenant in that unit that you're not going to occupy, then you got to kind of respect the rules and say, okay, well, that tenant is going to be here for another 3, 4, 5 months. If it's vacant, then the lender will say, well, what is market rent for that property?
Okay.
And still use the proposed rental income for that vacant unit, because as soon as you own the property, you're going to move a tenant in there.
You're going to get it rented, yeah.
But an appraiser's going to go out and do a rental analysis that then determines here's what the proposed market rent should be, and then use generally about 75% of that gross rent and say,
Okay.
here's what we think you should cash flow like. Yeah. So, good question.
Yeah. Interesting.
Yeah.
All kinds of fun.
Yeah. Well, things that people just don't know.
Yeah.
And also maybe if that's your goal, right? If your goal is to have rental properties, that's a great perspective. But if it's not, then there are other options too. Yeah.
Completely get it.
Yeah.
Completely get it. But there are folks that say, I want to buy this first property, then I want to buy rental real estate. Well, let's talk about that. Let's figure out, if your goal is to own rental real estate, let's talk about how to get started, because starting with a single family and then try to buy more rental property is a more expensive way to do it.
Right. Okay. Yeah.
Good question.
Yeah, I mean, for me personally, I feel like that's what I would like to have, is a bunch of rental properties.
Yeah.
And I did not buy a duplex with my first house. But when I learned about, you can still get there, just a different path.
Absolutely.
I was like relieved, because I was like, I didn't miss my shot to be a real estate
I
mogul.
would think that too. It's never too late to kind of reset, right?
It's never too late. It's never too late. And having someone to call and bounce ideas off of is a big deal. Again, the biggest mistake I see folks make is falling in love with either a rental property and saying, hey, I got to have this, but I don't have my financing lined up, or saying, you know, I really want to buy this home, but I don't have my financing lined up.
Yeah.
Get your financing lined up, then go buy a home. It's akin to, you know, I'm going to go buy shoes. Well, what's in your budget? How much do I have in my pocket? Well, those shoes may not be the right shoes if you're not sure what you'd like to afford.
So I'm curious to know, since you've been doing this for a very long time, how have things changed over time? Is it harder to buy a house today? Is it like, and I'm sure that's a loaded question.
Sure.
But, you know, you see this all the time, especially on social media, where people will say, you know, the real estate market today is not our parents', right? In our perspective, it's not our parents' real estate market. They were able to afford a home with one income household, at least for myself, right? So I'm one of 4. So I have 3 sisters, and growing up, we were a single income household. Only my dad worked. And we were able to own our home just based off of his income. And I see that today, it's much harder to do that.
So fair, and that's true. What we're discussing here is inflation, and is inflation real? The answer is absolutely yes. Everything costs more, including housing, than it did for our parents.
Right.
I grew up, and I remember my dad waiting in line for gas during the 1970s, and I don't remember. It was under $1.
Yeah.
Call it 50 cents.
Yeah.
It was a gallon. It was
right.
But it was still insane, and
right.
we're thinking, oh my God, the world is ending. Look at these lines that are just, you know, spinning around the block just to get some gas. And the reason I bring it up is because every generation faces challenges. Every generation faces challenges, and how we face these challenges really is, you know, unique to us, and that's God gave us creativity, and we figure it out. Buying a home is still the American dream. How to get it done is really the question of, who do I know that can help? What and family becomes a huge deal because of the emotional support and the financial support. So the reason I say financial support is because we go back to the down payment assistance situation. And one of the things that is important is to realize that the best source of down payment is going to be family gifts. I like to compare down payment assistance to renting a car. Renting a car is a good deal if that's your only choice. If you go into a new city and you don't know anyone, you say, yeah, I need a car, I gotta rent a car.
Sure.
A, it's expensive.
Fair.
B, there are, again, parameters, I gotta do this. But if I'm going to a city where I can borrow a car from my family member, I'm going to be a nice person and put gas in the car. I'm not going to wreck it. But the cost is significantly lower. And now my family member and I are working on the terms of how this is going to happen.
Yeah.
Right? Down payment assistance is the same way. If the government is saying, here's some assistance, sure, but the government sets the terms.
Right.
You can only go to 45% debt to income ratio. You must have a 660 credit score. If the situation where my mom and dad are gifting me money, then I can go down to a 580 credit score. I can have a 5.
You have no credit, yeah.
There are all kinds of options that are not available if I must have the government-sponsored down payment assistance. So yes, the government-sponsored down payment assistance, fantastic deal. But it is always better to have money from family. So very long-winded answer to your question.
Yes.
Is it harder today? Yes, but everything's a little harder today.
Okay. No, understandable.
Housing, but let me put it into a bigger perspective. The United States is one of those few wonderful places where you can still buy a home with as little as 5% down. Our neighbors north, not so much. And in addition to that, our neighbors north in Canada. In addition to that, most loans in Canada, and I'm speaking only from what I've read, so I'm not an expert in Canadian
You
finance.
don't do Canadian mortgages.
Canadian mortgages. But generally, they reset every 5 years. So you've got to refigure out. So it's like having a 5-year arm. In the United States, having a 30-year fixed rate mortgage with as little as 5% down, and is really it's a gift. It's a wonderful situation. Many of us are afraid in this market to say, "Oh my gosh, yes," but I'm going to be paying more than I do in rent. Yes, but you're building equity.
Right.
And in 10 years, you will look back on this day and say, oh my gosh, I'm so glad I did it.
Yeah.
Can the real estate market go down? Absolutely yes. But in a 10-year time span, if you look at any 10-year time span, worst case scenario is you break even.
Mm-hmm.
Yeah.
That's the worst case scenario. In most cases, you've increased the value of your asset.
Right.
If you rent, you have no asset.
Correct.
Best case scenario, you threw away money.
Best case scenario. Best case scenario, the memories, the memories you
The
created.
pool's nice.
Yeah. So buying a home, I know that there's a lot of fear. Oh my gosh, what happens?
Mm-hmm.
I have not, and I've been doing this 30 years. I have not met a client that says, "I'm sorry, I bought that home after 10 years." Now, there are situations where because divorce happens, they lose their jobs,
Life
they have
happens,
to move.
yeah.
Life happens.
Mm-hmm.
And they say, oh my gosh, this happened in 2008, 2009. The market crashed. People lost value in their homes 30, 40%. And if they had to move, then, you locked in a loss. That's unfortunately the truth. However, if those same folks kept their homes through today, those houses are worth much more than they were back when they bought them at the height in 2007.
Yeah.
Did it take a long time to come back?
For sure.
But it came back.
Yeah.
Yep.
For sure. I think we definitely share that value and that sentiment. I'm a very big proponent of home ownership.
Yeah.
I mean, that's also something that my parents were very...
Yeah.
I mean, that growing up, that was something that they always wanted us to strive for. You want to be a homeowner.
Yeah.
You want to own something. You want it to be yours. There's a special feeling about coming home and knowing that that's yours.
There's a huge psychological value in growing up in a home that your parents own.
Mm-hmm.
Yeah.
It's the idea that, hey, mom and dad own this home. We're going to paint the walls any color
Whatever
we
you
want.
want.
Yes.
We're going to have a puppy, and we don't have to ask the landlord if
Exactly.
we can have a puppy.
Yeah.
We're going to go and play. Mom and dad are going to put up a swing. Whatever it is, it's your home.
It's yours.
It's your little piece of America. It's amazing.
Yeah.
I never thought
love
about how that could have impacted me as a child because my parents owned their home my whole life. But there's an added sense of security that I don't even.
But there's like a
register.
stability that you weren't really aware of, right? Because you have to
Completely
think
unaware of
about renting and the renewals, and you would, I would imagine, as a kid,
stressful.
it would
They're
be
raising the
stressful.
rent.
It's stressful for a parent, and that in turn becomes stressful for a child. And we don't think about it, and think about how much mental and emotional energy that spares you, that you can then focus on building a business, having relationships, creating a life. The fact of not having a stable household is a huge deal.
I never thought of that.
Yeah.
But it's kind of a thing you think about, like if you want to have your own kids, you know.
Yeah.
If you had that experience, or even if you didn't, and you want to provide that for them, it's a huge advantage just growing up in a safe, stable environment.
Mm-hmm.
Yeah.
I mean, I
That's a
think
good
there
point.
is some good research out there that
I'm sure,
that it's, like the number one indicator of a well-adjusted adult is childhood stability.
Mm-hmm.
It's like that's just the number one thing. It doesn't matter rich or poor, it's about stability.
Mm-hmm.
So again, housing is a huge factor there. If you lived in the same house, or if when you did move house it was for just life changes or something, that's going to impact you in the long term. So I think we really just share that value of the importance of home ownership.
It's a big deal. And
It
again,
is.
I know that there's a lot of fear. Oh my gosh, is now the right time? Now is always the right time.
Yeah.
Now, especially if we're talking about living in a property.
Sure.
There is a statistic, I don't remember exactly what it is, but there's about a 40% difference in wealth from home ownership versus renting.
Wow.
It's huge.
That's significant.
Because was last year a great time to buy a home? I don't know. Probably a lot of folks didn't, and they were waiting for it to improve. Though for those folks that bought a house last year, they have easily more equity today, which is part of the wealth, than those that didn't.
That chose not to.
So today, those that chose not to are still renters. Those that chose to buy last year are now homeowners. They now have this equity that built up over a year. Call it $5,000. In most cases, it's a lot more than that. They have $5,000 wealthier than the folks that choose
Anything's
to
better
rent.
than zero.
Yeah.
Better than zero.
Yeah.
Absolutely.
Yeah. So
Absolutely.
on that note, then refinancing.
Yeah.
Right. So let's say you bought a home.
Yep.
Let's say you bought a home in 2020 was a great year for interest. So maybe 2021, 22, you bought at like a 6.5.
Yep.
What are rates looking at now? When would be a good time to refinance? Or when is it ever a good time to refinance?
Oh, what a great question. So, refinance, let's just discuss what refinance means. Refinance means I'm paying off an existing mortgage with a new mortgage for whatever reason. And the reasons could be, and in 2021, 22, rates were at historical lows. They were in the high twos, low threes. It was just a fantastic time to borrow
Yes.
money. And lock it for 30 years, I mean, that's free money.
Yeah.
Right? and still people opted not to do it. So.
I know it was a great
Yeah.
time to buy.
Yeah.
It was a great. I think we both bought in
We both,
2020.
Yeah.
So
It was a
fantastic.
wonderful time to buy. And now tell me, did you have concerns of, oh my gosh, am I doing the right thing?
Of course.
Yeah.
I feel like any big decision you feel that way,
Sure. Yeah.
and then and a lot of times, I've found that's a reason to do it.
Yeah.
Right. Like,
if you're scared, do it.
and a lot of situations, I
Yeah.
feel like if you feel like I don't know, sometimes you just do
Go
it
for
and it's
it.
gonna pay off. But yeah, I think that's just kind of life and just human existence. Is
Yeah.
You make a big decision and you're gonna It's good to second guess yourself and kind of analyze your decision.
Absolutely.
It's a big move.
Sure.
Yeah.
But yeah, I felt a little bit of that.
Yeah.
I was very
yeah.
excited.
But today you're
But
saying,
yeah.
oh my gosh,
Yeah.
what a brilliant stroke I had. How I was a genius.
I was a
Right?
genius.
And I mean,
Charles, you're a genius.
I've been like in real estate for a while, and I've always had like some exposure to it, so I always knew it was a goal of mine.
Yeah.
And so I knew it was like do it as soon as possible. But yeah, when everything's kind of up in the air, pandemic and everything, you just don't know.
Yeah.
But that's the nature.
But
of
also
things. You never know.
I also think that it was kind of luck in the sense that
Very lucky.
Yeah, in the sense that and that's kind of what you were saying, right? The best time to buy a house is just whenever you want to. And for, a lot of people, that was just kind of the time in our life where it was like, okay, that's the next step.
Yep, that's the next step.
And we just happened to really be lucky that we were ready for that step in the
At the
time
right
where
time.
interest rates were low.
Well, good for you.
But,
Well done.
yeah.
Well done. But let me answer your question about when
Yes.
is a good time to refinance. So refinancing, you do it for a number of reasons. One, my interest rate is higher, and I had that situation. I had a 5.5%, 6% rate. Rates dropped down to the threes. I'm like,
What?
yeah,
Yeah.
yes, we're going to do this. Now there's still costs to refinance, so you analyze the benefit versus the cost, and then there's also the term. Am I going to keep this property long enough to recuperate that investment in closing costs? And that's a real calculation. If I'm going to sell my home in 2 years, then
What's the
probably
point?
no, it's not going to be a good decision to refinance, even if I'm going to get a cheaper rate, because it will take a while to recuperate that investment.
Okay.
It's a
Yeah.
mathematical equation.
Sure. Yeah.
So that's one reason. The other reason, and I'm seeing more of this today, is okay. I have a 3 or 3.5% interest rate, and I don't want to get rid of that. It's a great rate, because today rates are high 6s, low 7s. That's kind of where rates are today as we speak. And you say, well, why would I pay off a 3% rate to get a 7% rate, right? Well, the only reason is if I need money to pay off credit cards.
Okay.
Because credit cards are at 22%. If I have a $100,000 loan, a mortgage, and I have $100,000 and $150,000 worth of revolving debt, student loans, car payments, credit cards, and they're all above 7%, well, then you look at the blended rate. What's the money? What's this borrowing really costing me on a blended rate? And you do the calculation. You say, well, if I can lock everything in at 7%, it's better than
Sure.
the 12, 13, 14, 15% blended rate that I have with
Everything across
Everything
the
else.
board. Yeah, the
Yeah.
average of it all.
Right.
And the other one is you need money. The third is, okay, I need it because I need
Roof
to do
replacement.
Roof replacement. roof replacement. And we'll talk about options for roof replacement.
Yeah.
So absolutely. And the question is how long. The question of do I do a cash out refinance really depends on how long do I need the money, how quickly can I pay it back.
Okay.
Because once you do a cash out refinance, you are locking in a rate and a monthly payment for an extended period of time. And if I'm using that money for a roof, or if I'm using that money for something that's going to give me an immediate impact and add value to the home, great option. If I'm using that money because I need,
I want to go to Paris.
You want to go to Paris? Yeah. No,
Maybe not.
or situations where I need a short-term loan. A short-term loan is really better financed with a home equity line of credit. So a HELOC. So, and the benefit of a HELOC is that you generally use the money, you can pay it back, and you have that money available again. It's like a big credit card.
Right.
So as long as you use it wisely, it's a great option. So back to your question of when. So if I'm lowering my rate, which is unusual in this market,
right.
If I'm going to pay off high cost credit cards or revolving debt, or if I need the money for something that is actually going to meet the requirement of, yes, this makes sense. I'm adding a debt to the home, but I'm also adding a new roof, adding
maybe some kind of remodel
windows,
or something.
Yeah.
Exactly. And so refinances are a great option. It really depends on the need. If somebody's getting divorced, that happens. So okay, I gotta do a refinance, pay off my soon or ex-spouse, and I gotta do it.
Yeah.
Take them off the title.
Yeah.
You gotta do it.
So those are some situations where refinance is a good option.
Okay.
Are you seeing a lot of refinances now for those financial struggles? Because, I mean, we see it in roofing, and I talk to other trades and businesses, and everybody's kind of trying to stretch every dollar.
Yeah.
There's some real economic factors, and then there's some emotional ones that people just have this sense that things are bad.
Yeah.
I'm not going to say it's 100% one or the other. It's kind of a mixture of both. Like, there are some real things. Things are more expensive.
For sure.
But I've come to learn just in this business that a lot of people's buying habits are emotional.
Yes.
And how they feel about the environment and the economy.
Yes.
So do you see a lot of people refinancing for those economic strains?
So the refinances I've done are primarily for that, but the refinances as a percentage of total volume is really significantly smaller than it was back in 2020, 2021.
Right.
Because rates are higher. So
taking
now,
advantage of the low rates,
So what I'm seeing, and I don't have any stats to support it, is I'm seeing most folks will start with an equity loan and use that. And then if the cash flow situation does not improve or gets worse, they max out that equity loan and their credit cards. Now they're trying to figure out, okay, well, how do I contain this? And then it's, okay, well, what's the value of the home? How do we do it? Because
refinance,
the second loans, equity loans generally are more stringent. You need a high credit score. You need to show more income. So basically, if you're doing a first mortgage and you're paying off a bunch of debt, you can consolidate it, and it's a cleaner, neater look.
Okay.
So, good question.
Yeah. So historically speaking, interest rates, are they coming down? What are we thinking?
Great question. I wish I had that chart with me. So in the mid to late 80s, interest rates were in the teens.
Wow.
Yes.
I think if people saw that today, that would be really shocking.
Yeah. So we like to blame the highest point of inflation on Jimmy Carter. I don't think he deserves the blame, and I don't think he deserves. Well, anyway, let's not get into politics.
Yeah, the president doesn't really impact it.
No, let's get into it. I'm just kidding.
To some degree.
No, let's.
But interest rates were 11, 12, 13%. And people were still buying homes.
This is exactly what we were just saying. This was our parents' market, and they were buying homes just fine.
Still buying homes.
Yeah.
One income, buying a house.
Yeah.
And I remember when I bought my first home. I paid probably 9.5% on my first home.
Your first home.
And we refinanced, and I remember when rates got into the 5s, and I was thinking, oh my gosh, this is like free money. This is amazing.
Yeah.
And then they dip below 5, and I'm thinking, whoa, how's that possible?
Right.
How's anybody making money?
Yeah.
How's anybody making money at rates of 5%? When they dipped into the 3s, I'm thinking, this is
not real.
This isn't real.
Not real.
Yeah, this isn't real. This isn't real.
Yeah.
And maybe in some ways it's not, because
It's not.
Yeah.
It's not, because
it's all going to come back somehow.
Well, the money that we're borrowing from somebody who's saving. And if somebody who's saving isn't making enough money, then they're not saving. And what we really need to do is figure out, okay, how do we incentivize saving? But if I'm not making any money by keeping it in a CD, then why am I going to buy a CD, right? Because at the end of the day, it's the people that are saving money that are allowing us to borrow.
To borrow, right?
Yeah.
I understand it's far more complex than that.
Yeah.
The government's printing money, but that's that's a different topic. So I think that we'll see a decline in interest rates here probably before the end of the year. The presidential election is going to influence that, not necessarily affect it. I don't think that they're direct levers, but certainly influence. So
right.
I think that we'll see an interest rate drop. I don't know that we'll get to the 3s in my lifetime, but certainly a little lower than where they are today.
Okay.
And any news is good news, and we're all anxious for, okay, even if it's a quarter drop in rate.
That's something.
Wonderful. Now's the time. I was a genius to wait, right?
Well, I think that helps really put things into perspective, because I think there's always, like we were talking about earlier, there's a lot of panic that when people want to jump into home ownership saying, no, the rates are far too high. I've seen them in 3s and they're at 7, so it's not a good time. But when you add into the historical context and saying, well, in the 80s they were in the teens, it's not about the rate. It's about what's going on in your life. Is it a good time for you to buy a home?
Is it a good time to buy? And there's a saying going around in the real estate industry today. Said, you're going to marry the house and date the rate.
Yeah.
So basically, you're
it's
buying
temporary.
a home. Because you can always refinance. If rates go down, you can always change the rate.
Right.
But did you buy the house that you wanted and needed? And guess what? When rates go down, the property values are going to go up because there's more demand. So, again, if there's a need and the capacity to buy a house today, then just do it. You can always refinance later. It's like starting to invest. It's always scary, but it is really something that you look and say, "Gosh, I'm glad I started." And speaking of investing, there's something to consider when you're considering investing in real estate or buying a home. If you invest $100,000 into the stock market and you earn 10%, you now earned $10,000, right? So $100,000, earn 10%. If you invest $100,000 into a $400,000 home, right? Now, and that $400,000 home increases by 5%, not even 10%, 5%. That $400,000 home just gained $20,000, right? You invested $100 in the stock market, you earned 10. You invested $100 in real estate with half the appreciation, and you earned double. Double the return of your $100,000. Leverage in real estate is huge.
Huge. Yeah. Putting it that way is just like no-brainer.
Yeah.
So, gosh, we want to wait till the perfect moment. There's no such thing as the perfect moment. It's just, are you ready? Do you have the capacity? Do you have a need? Just do it. Yeah. I want to questions. I'm sorry.
No, go ahead.
So I wanted to share some ideas for situations with roofs. The roofs are part of a challenging environment, because if you don't have a roof that passes the insurance requirements, insurance company will drop you. So it's a big deal. There are options to do either if you're buying a home and the roof is not in good shape, or there are purchase and renovation loans. There are 203Ks or home style where you can actually include the cost of the roof into the financing. So great options. If I already own a home and perhaps I don't have enough equity to do an equity line to do the roof, you can do a refinance that will include the cost of the roof in your home loan. So there are options for a situation, and you say, "Gosh, folks are cash strapped." There are options.
Yeah.
So happy to review them with some of your clients
Yeah.
that are saying, "Hey, I can't afford to fix that hole in my roof."
We come across a lot of those people,
Yeah.
especially people looking to sell,
Mm-hmm.
and they can't find a buyer that'll qualify because the roof is old.
Yeah.
You know, so if they stay in the house, they probably wouldn't need to replace the roof for another 3 years, maybe.
Mm-hmm.
But because they're wanting to sell it, nobody can qualify because it only has 3 year lifespan. They're looking for 5,
Right.
and so we see a lot of situations where people just have to, I have those sellers that will finance the roof and pay off that loan at closing when they get the proceeds. But yeah, it plays a really interesting part when we talk about roof replacements and just like how do you get those funds, and sometimes getting it sooner than you would typically need them,
Right.
just because somebody doesn't qualify.
And for those buyers, so if the sellers are looking to do the roof replacement, the vehicle that you're using to actually, replace it, finance it, just the roof, and get it done, that's a great vehicle. But for those buyers that are thinking, oh my gosh, I can't buy this home because it needs a roof.
Yes.
In addition to the roof, they can roll in, hey, let's remodel the bath, let's remodel the kitchen,
Yeah.
Yeah.
and really move into the home that we customized and made ours.
Exactly.
And that's all financed.
And I would say for the buyer, that's a much better option because you're choosing the bathroom tiles, roof, windows that you want.
Exactly.
The seller, they're out of here. Like they don't care
Yeah.
if it lasts what it's supposed to, right?
Yeah.
They're just like, let me get the cheapest thing,
Yep.
just so I can check the box on the loan document for
Cheap
the buyer.
and fast.
And fast.
Yeah.
Fast is not good.
Yeah.
in
Not
a lot
always.
of
Yeah. No.
situations.
Mm-hmm.
So yeah, I would probably say it's best in the buyer's best interest to do it themselves and lump it into their loan as opposed to asking the seller to do it because
Absolutely.
their incentives are not aligned with yours.
100%.
Yeah.
100% agree. Yeah. And the other part of that is it opens up opportunities for properties that perhaps are not financeable. So remember I said there's income, debt, credit, and assets. The fifth thing that lenders look at is the collateral, the house.
The property itself.
So the house has to be in decent enough shape that it is good collateral for the bank. That's if the roof has a hole in it, that's not good collateral. The lender's going to say that roof needs to be taken care of before we will lend this money. If there's no AC in the property, well, we can't lend on this property. So there are a number of things where lenders will say, you know what, this is not good collateral because the current condition of the property is not to our standards.
Right.
Well, a renovation loan is a good option. We say, okay, as long as we know that we're controlling the renovation portion, we'll do this loan and include the renovation costs. So, good option.
Yeah, it's great to know. That's awesome.
Love it.
Yeah.
So we have a question we like to ask our guests.
Sure.
I say guest, you being the second one. So it is plural, but just not many. If you were to assign homework for someone looking to get into buying a house, or honestly any homework in general, it can be personal, financial, real estate wise, what would you say is the best homework for us to do prior to making a big decision like that?
Choose a mortgage person and reach out to them and start the conversation. Just start the conversation. It is going to help. If I'm starting and I'm thinking, gosh, I really want to buy a home, our knee-jerk reaction is, let me call my real estate agent.
Yeah.
And that's fine, great. But your real estate agent is going to say, well, have you talked to your lender? Or do you have a lender? And now that real estate agent is going to connect me, the buyer, with their preferred lender or group of lenders. But if you have a relationship with someone, you know someone, or certainly please call me, then reach out. Just there's no dumb question. The only dumb question is the one that goes unasked. So homework, if you're thinking about it, reach out. Let's have a conversation.
Step one is reach out to the person who does this for 30
Exactly.
years, does it every day.
Yeah.
Yeah, I think that's great advice, and that kind of translates to all industries. But a lot of people, you get caught up in the emotions of it, and you kind of put the cart before the horse.
You want to do the exciting part first. I mean, let's be
Yeah.
honest, right? When you're buying a house, you want to start looking at houses. That's fun.
I mean,
It's very true.
It's
very
fun.
true. It's
Yeah.
fun. And, so the answer is yes, but it doesn't mean the fun can't be had.
Exactly.
It's let's take care of this so that when you start having fun, you know you're not going to be let down.
Exactly.
By finding out, oh my gosh, I can't. I was in love with that home. What a bummer! I can't buy that home.
Yeah.
And good point, Charles. When you're in a hurry, I tell my son and daughter, look, when you're in a hurry, you lose. That's all there is to it. So when you're in a hurry, you lose negotiating power. You lose the leverage in the transaction or the deal. So don't be in a hurry.
Yeah.
Don't be in a hurry.
That's across the board, whether it's buying a house, a roof,
Yeah.
getting a remodel in the
Don't
bathroom.
be in a hurry.
Yeah.
And things happen. Sometimes there's a hole in the roof, and you hurry up, fix it before you know the water damages the interior. But in most things in life, you know, when the emotion gets in the way and you start saying, "Gosh, I'm in a hurry," you're in for a loss.
Yeah. Yeah.
Awesome. Well, thank
That's
you so
amazing.
much for
Yes,
spending this time with us.
thank
We
you.
appreciate all your insight and perspectives. I feel like I definitely walked away with some good
Thank you.
knowledge.
Yeah.
Great. Thank
Don't
you.
rush.
Yeah.
Take your time. Talk to the experts. Do your homework.
Yeah.
So,
Lender first.
lender first for sure.
There we go.
Awesome.
Thank you so
appreciate
much.
Thanks so much for having me. We
Of
appreciate
course.
it. I appreciate it. Thanks.
Yeah.
Cool. See you guys.
Thanks so much.
Yeah.
That was